Good morning to the Menace Militia. I'm Jonathan Thompson. Thank you so much for coming back to another episode of Market Menace Trading. Guys, there is something happening right now that is unbelievable. Absolutely unbelievable. I'm going to get into the chart. I really don't want to waste any time. I have a big trade going right now. I'm going to go ahead and give you guys the breakdown of what's happening there. Once that trade is done, assuming there's not another one immediately to follow, initially, I want to go ahead and handle this trade because Bitcoin is testing 26,000 right now, and actually it broke it a few minutes ago. So I'm going to go ahead and just get right into that, man, because this is a wild trade. Here we go. So I just took a trade right now. I'm up 142 on it, right? I had one earlier this morning for, I think, 113 or something like that. So I went ahead and closed that trade right before we had this break here. Let me go ahead and zoom out on this a little bit. I may end up having to just real quick close this trade in case this decides that it wants to push back up. So let me zoom in on this so you guys get the real-time feel for it. Stop loss is all the way up here. The trade is for basically one Bitcoin. So that means my stop loss is a potential $242 loss. As of right now, though, in realized gains, as far as the $500 account hang on a second. As far as the $500 account challenge, I basically doubled the account yesterday. I gave a little bit back at the end of the night. I'm thinking about that. Looks like it's trying to form support at 26. Really dangerous area here. Trying to decide if I want to hold this one or not. Order book is going absolutely insane right now. Wow. Oh, come on. All right, so that's a 5-minute chart. So that was the 5-minute candle that just closed. Let's look at the 1 minute. I suppose if this breaks here, there's not really much up here. A couple of fair value gaps up there, but nothing crazy. If this gives me another bearish break of structure right here, right there, that green line right there, and takes out that order block, that's going to be fireworks, man. Ooh, boy. This could be a huge trade. It's already a pretty big trade relative to the size of my account. This trade right now puts my account up 20% just on this one trade. So let's see. Honestly, I'd be a fool not to take this, but Bitcoin is such a gamble right now as far as trading is concerned. It is all over the place. I thought I was liquidated twice yesterday within about 35 minutes, just because the volatility was just unbelievable. So I ended up giving back. I actually got the account. I grinded it up to about 1,600 yesterday, and I ended up giving back about 490 on 2 trades, and they were back to back. And after that, I was like, all right, well, that's enough. It's too volatile. And I knew better. I knew I shouldn't have been trading it at all, but now it's kind of calmed down a little bit. So what I've been waiting for is moments where I can tell that something big is about to happen. A very key area of support, for example, starting to break. Let me give you just a quick overview of my chart real quick. Okay, and I'll do my best to keep that there. Hopefully while I'm talking, I don't allow all of my gains to evaporate. I suppose if that gets back to 120, I will give it, well, I don't know. I don't know about that. I actually think that I'm going to go ahead and endure what happens. RSI isn't bottomed all the way yet. Okay, not bad. 26.43, 44. So that's at 125. I really don't want to re-enter on that fair value gap just because it's so incredibly hard to nail a good entry. My entry right now, in my opinion, was perfect. I I'm going to break that down here in a second. So, man, it's already back to 100. I mean, my target on this, guys, it said the yellow box territories that you're seeing right here. This is the Fibonacci golden pocket, the point 0.5 Fibonacci to the 618, as drawn from the anchor points of the swing market high prior to the dump and the swing market low at the bottom of the dump yesterday. The yellow box territory you see to the downside here is the inverse golden pocket, drawn from the swing market low from yesterday up to the swing market high after the dump. So these are the areas that are extreme points of interest as of right now. And now that Bitcoin has fallen below that golden pocket, I'm really hoping that at a minimum we get a retest down to here at 25.8. But I tell you what, man, like the rest of the stock market is getting annihilated right now on that evergreen news, or evergreen or evergrande, I can't remember. But yeah, man, like everything's getting tore up right now. All right, so I've already given back all the gains, the unrealized gains. It's at 59.60 or so right now. So I'm looking at it. I'm pretty much obligated to hold this at this point. I mean, not obligated. If I sold now, I'd still make $50, which is still a great trade. I'd still, adding 8% to my balance. And I could re-enter. What I should have done is sold here, allowed for the re-attack, which I knew was going to happen. Let's see. That is... Let's see what kind of trouble it's going to run into. I think I kind of want to... I can't decide if I want to close the trade, wait for the push back down, or if I want to add to the position, because I still have a little bit in the chamber here that I can do that with, and I can bump my position from 1 Bitcoin. I believe I can bring it up to, but it'd be about 1.61. So that would be one hell of a move. Sorry, not to be distracted, but I'm trying to process what's happening on the chart at the same time that I'm trying to talk to you guys. So let me just see what's going to be the best way to handle this one. Okay, so on the 5 minute, it looks like it's getting a bit of a rejection on the 9 exponential. The order book is going absolutely insane right now. Wow. Like, understand this, guys. We are all going to experience a tremendous amount of volatility today, tomorrow. I mean, honestly, probably for the next week, we are going to have horrible or very, very good volatility, depending on your viewpoint of volatility. I actually like volatility because I'm a trader, but long-term investors hate it. They hate it. Unless, of course, it dumps and gives them the opportunity to acquire more Bitcoin, which is the core of everybody's strategy, or at least it should be. Not financial advice. Just a guy on the internet, guys. Not financial advice. Okay, so that seems to be pulling back now. I wish I would have added to it, but such is life. Okay, so... All right, so that's moving back down. We're up 81 on the trade as of right now. Looking for that to get that pushed down. Let's see where it's at on the 1 minute chart, because honestly, that's what these guys all care about right now. Okay, that's a break of the 9 exponential. I do have a fair value gap here on the 1 minute chart. So going to need to see the continuation there to go ahead and close that. I want that to be fully mitigated. So that's going to be green there. And I'm going to start looking for some 1 minute order blocks. Boy, dude, today's going to be wild. I promise you today's going to be absolutely insane. All day long it's going to be like this. It reminds me of the Ralph Wiggum meme where he's sitting on the back of the bus and he says, "I'm in danger." That's how I feel every single trade for the last 24 hours. Man, it's wild. Like, I had a downside target of 27K. Well, initially it was 20 27.9, because that was right where that annual support was. However, once we broke that and we started to show a lot of weakness on that, I updated my target to 27.1, and it was on its way there prior to the Evergreen or Evergrande news breaking. So basically, that ended up being the catalyst that just absolutely annihilated Bitcoin to the downside, just over $1 billion in liquidations. But honestly, I think that's a good thing because, I mean, these markets are tremendously over leveraged on a regular basis. Those flush outs need to happen in order to allow long term hodlers to step into the market and increase their long term holdings. And it's a perfect buying opportunity. Like, if I know that probably a lot of you are new to Bitcoin or new to crypto. So, you see a 10% or a 20% move to the downside, and you probably are still in that phase where you get scared. I promise that fear dissipates to a certain extent. It becomes blunted because, and this is especially true if you have a strong fundamental understanding of what Bitcoin is and why it's so important. I will be building a tutorial or a kind of like a webinar where I will give a real comprehensive breakdown that is very easy to understand of what Bitcoin is, why it's important, also talking about what strong money is. So I will try to get that done as soon as possible. But I mean, again, my primary function in this world is a trader. So that always needs to come first. So when these markets are moving, that is exactly where I'm going to be. Days like today are the days where you can either make a fortune or lose a fortune. You have to make sure, especially on days like today, that you are exercising strong risk management. That is a fair value gap fill or halfway mitigation. Where's the 15-minute at? It's above my entry, so that's not good. Okay, so right now what it's contending with, and let me go ahead and just zoom out on the chart for a second. What that is contending with is this downward trend here, that trend line on the bottom that it just broke. I took my trade after we bounced here and pushed back up a little bit. And when I was confident that it was going to start pushing down and taking out some of the order blocks that are over here on the smaller time frames, that's when I went ahead and took my trade. So as of right now, that was a big push down. The fair value gap that was here, the implied fair value gap, I should say, because the 15-minute chart didn't actually create a fair value gap yet, because it still has 3 minutes to close. So that has been fully mitigated. Now let's look at smaller time frames and see. Okay, there is a fair value gap on the 5-minute chart, though, right here. So I'm looking for that to get mitigated. Wow, I ended up talking and letting that go all the way back to my entry. Yikes. Okay, well, let me think. Oh, those are not fair value gaps. Those are order blocks. Okay. We're basically retesting my entry. I'm telling you, man, like trading in these markets, the idea of having a trade just immediately go your way, that one actually did, but you have to be prepared to sweat. Like I did a video last night in my most recent video where I had to use some real risk management in order to mitigate a major loss. That loss would have been about $210 had it actually hit. So I ended up scaling out of my position. I ended up dumping about 75% of my position at various points as it was up, or as it was a short position. So as it was making its way up, in order to mitigate what would have been a $210 loss. Excuse me. So I did that in order to reduce the amount that it would end up being total. So, however, once I did that, I did it. The reason I didn't completely close the position is because I believe I ended up realizing, I think in total, $72 in losses initially. So I kept the position open and I ended up adding to the position even more as it made its way back down. And I ended up actually making 5 cents on that trade, which I know it sounds stupid and it was a 2 hour trade, but I managed to avoid a major $200 loss. Now, I could very well be in a similar situation here. What I should have done is sold down here at 25.9 or, somewhere in this range, 20, 26,000 and then waited for that inevitable pullback. So now I get to sweat. So that's the problem with not taking the money when you first get it because it's not guaranteed. Like there's no guarantee that that money's going to be there in 10 minutes. So that was my mistake. So now what I end up having to do is now I have to kind of sweat it out. I have to gut this potential push up out. And hopefully, some of the previous order blocks to the upside and the moving averages will defend my stop loss here. And I believe they will. I mean, it doesn't make much sense for us to have such a violent push down. The bounce here actually doesn't make sense to me either yet. Now, a bounce on the golden pocket, the inverse golden pocket, that makes sense to me. What does not make sense to me is coming down just to the arbitrary 25,950 and then getting the bounce. I don't know. I guess 26K is a significant area. I'm not sure what that correlates to in the past as far as order blocks are concerned. My guess is that, well, I mean, all the order blocks that are between the price where it is now and where it ended up dumping to, all of those order blocks are gone. They're worthless at this point. So, I mean, all of the orders that would have been there are gone. So we are retesting the golden pocket to the upside. And we are also testing that 15-minute 9 exponential moving average. I will start to reduce my position if I get some sort of a candle close over the 21 exponential on the 15-minute time frame. And the reason I'm going to do that is because that has been fantastic resistance for hours. I mean, honestly, since falling right here, it has failed to get back above. So that since, 8 o'clock this morning. So if it breaks that and gets some sort of a candle close, I'm going to go ahead and mark that because I'm going to want to look at that at various time frames. So let me go ahead and put that here. So that's at 26,285. So I'm going to make that, we'll make that yellow so I know where that is. And let's see what this is doing on smaller time frames. Okay, it is contending with a nice 3-minute order block right here. With any luck, that will hold. There are no fair value gaps here. I mean, they've all been mitigated at this point. The majority of them have been mitigated. Obviously, there are ones to the upside that have not been mitigated. And it would be unbelievably irresponsible of me to drag my stop loss up above all of the fair value gaps for this entire pattern. I mean, it's too much. I will say, though, unfortunately, I am a bit of a liquidity target on the trend line liquidity here. Has that moved? 1 second, guys. Just need to make sure that is still lined up where it needs to be, because I was pretty sure that I had my stop loss above the trend line there. Okay, and I do. All right, so that's a nasty little 3-minute candle. Let's look at the 5-minute time frame. Got about 2 minutes left in the 5-minute candle here. So far, nothing too abnormal has happened. The trend is still absolutely down. The bears are 100% in control right now, even though we're getting this rally here off 26K or 20 whatever 25,950. I mean that's a big dude. That's such a big move. That's such a big move. Like my goodness, what is that? I mean that in and of itself, just in the last 20 minutes, is a 1% move for Bitcoin. That's unbelievable. I mean, you guys want to talk about volatility. We haven't seen volatility like this. I'm going to be brutally honest. I've been in crypto continuously since about 2015, 2016, right? Late 2015. I have never in my entire career seen a dump that violent, that fast. Now, I've seen Bitcoin make moves like that before, but I have never seen Bitcoin shake 4 grand off its price in 3 minutes before. I've never seen that before. It's it was unbelievable. It was unreal, and I'm very upset with myself also because if I was in a trade after I made that video, I was in a short position, and I ended up selling at about 27,060 or so, and I realized a nice little $300 profit on that trade, and not 15 seconds later, the bottom fell out of the market. And it's just one of those moments where you're like, oh my God, like I can't believe that just happened to me. And I promise this is going to happen to you. And it sucks. And you beat yourself up. But it's very important not to retrospectively trade. It's easy to look back at a trade that has already happened and say, man, I wish I had done this. Or I should not have done that, whatever, right? But this was definitely one of those moments because had I held that trade, I would have made about $4,300 on that move down. So I'm very, very upset that I did not do that. It would be nice to have, I mean, what, 10x my. When I started the day before yesterday, the account was at about 430 or so, right around there. So that means that within about 48 hours, I would have 10x'd my account, which would have made this challenge go a hell of a lot faster. But so yeah, as far as that is concerned, by the way, I do want to touch on that. I know a lot of you guys, when you're starting out, you're not really sure what to do or how much to start with. I get this question all the time. How much is enough to start trading with? And the answer is anything. And the reason that I can say that is because poker players have a great analogy for this, or a great saying. It's something that I've always admired, is that when it comes to like them almost being knocked off a table or knocked out of a tournament, there's a common expression in the poker community. It says, all I need is a chip and a chair, a poker chip and a place to sit and some cards, so and the same thing is true when it comes to trading. So as long as you are as long as you are not obsessed with dollar amounts, and you are instead shift your mind to appreciating percentages, then really that, in my opinion, is the key here. If you are making 2 or 3% added to your balance every day. I mean, guys, the compounding of that is incredible. Hopefully, I remember before the end of this video to show you the Excel document that shows the Excel document that my colleague gave to me, saying that shows the compounding growth effect of even just a 5% increase of your balance, every day, or let's say 50% of your days. I mean, it gets, even starting with a $500 balance, if you are able to increase, let's say 5% of your balance every day, and that is a lofty, lofty goal. I mean, if you're able to do that, if you're able to do that consistently, I want to talk to you because you clearly know something that I don't. But if you are able to do anything even remotely close to that, then you can turn $500 into $80,000-$90,000 inside of 4 months. And that's the effect of the compounding. So Warren Buffett was big on this, and we've all heard this. If you've ever dabbled in any level of finance in any way, or even watched CNBC at any point in the last 35 years, you've heard Warren Buffett say, if you take $100 out of every paycheck or $100 a week and you put it in, let's say the S&P 500, which has a compound annual growth rate of about 8%, or excuse me, it appreciates at about 8% annually. But if you did that, if you started doing that at age 20, by the time you retired, you would have north of $1 million to retire with. But if you started doing it at 35, then you would only retire with like 260,000 or something like that, right? We have the ability to do that now with Bitcoin, but instead of having the S&P, which is a 8%, which appreciates about 8% annually on average for the last 50 years, we have Bitcoin, which has a compound annual growth rate on average of 263% annually. So that means that every year on average, whatever you put into it is going to appreciate exponentially at a rate of about 263% annually on average. And that is including the incredible boom and bust cycles of Bitcoin caused by the halving. So, I mean, that's what we have available to us, and that is something that is extremely valuable. And to put that in perspective, that 263% compound annual growth rate, there's never been anything. There has never in human history been an asset that has delivered those levels of returns. It is off the charts. The next closest is Tesla at 63%. So, I mean, to me, it's not even a question. Like, essentially, and that's just one of the amazing things about Bitcoin, is that you have the ability to use it in so many ways. That is getting rejected. That is getting rejected off of that trend line on the reattack. I think I'm going to get another shot at this. Let's go. I'm so tempted to freaking YOLO the rest of this into it, but I'm going to save it in case I need to try to average down later, which I'm going to start making a consistent practice instead of using all of my purchasing power on my initial entry. I will probably start doing 50% instead to allow me to have the opportunity to average down in the event that I want to. Comes in very handy sometimes. Came in very handy to me yesterday. Okay. So as of right now, we're up 54 on the trade. This is the 5-minute chart. We are trading below the 9 and the 21 exponential moving average. Let me switch over to the 1. We are below that. Should also be below the 3, obviously. Okay, the 3 is the one about to close. Yes, the 3 minutes about to close. Really want to see a nice rejection off that 9 exponential and also that trend line there. That's fantastic, man. I mean, that move right there mitigated both of these fair value gaps here, and also set a lower high. So now, in order to get the real confirmation here, we have to have one hell of a move from 26,133 all the way down to here. Oh, actually, that's not that bad. 25,950 or so. Or, I'm sorry. Yeah, 25,950. That's not bad at all. It's only a couple $100. Like I said, I'm not really good at mental math anyways. Yeah, so basically $170. Okay. So as of right now, we closed that 3-minute. That's a decent 3-minute candle. I would have preferred that it just failed to touch it at all, but hopefully this candle will do what we need it to do and fulfill that for me. That would be nice. Let's look at the 1 minute. Okay, so now what I'm looking for, guys, there are some fair value gaps here. This one hasn't been fully mitigated yet. This one right here. Okay, so I'm looking at that, got about 60% of it filled. It's not quite there yet. So there's still orders down here. which means that when we come down here, we could still get a bounce. But what I'm looking for, and I'm going to point something out very, very important. This right here is a textbook trend line reversal, or a textbook trend reversal. Ready? Let me show you what I'm talking about. I got the move here. I go up, come down, set a new high, okay? Higher low, another higher high, but instead, when I came down and set a higher low, I rolled it rolled over. This moment not just yet. Technically right here. Oops. When it breaks this right here, it will be considered what's known as a change of character or a market structure shift. Okay, and that's going to be that level right there. So I will mark that with that teal color. So what I want to see happen is I want to see that swing low right there get taken out. Okay, now in traditional retail, I'm sure if you guys have spent any time studying any kind of charting, you would have heard of something called a head and shoulders. So that's pretty much what this is. But thinking of it in those terms, I think is counterproductive. I think it's much more effective to think about price action in terms of trends. I think that is going to make you a better trader instead of relying on, an arbitrary shape that, will supposedly break to the upside or the downside a certain percentage of the time. I think it's more relevant to think about price action in terms of trends and trend reversal. So what I need to see happen here, something really cool has already happened. So down here, this will be the official change of character, right? When it comes down here. But what we have done already is we have a bearish break of structure, which happened here. And now I'm looking for a second bearish break of structure, which I just got right here. That is when the price takes out a previous swing low that it just got done setting. So now we are having that market structure shift. This is also the bottom order block for this swing low here. So that's probably why it's getting a bit of a push. But I mean, we just set two swing lows, two lower lows in a row, followed by a lower high. So I am really, really hoping that we are going to get that push down. As a matter of fact, now that is the new bearish break of structure. Now, it's pretty common when you get these bearish breaks of structure that after they happen, if you don't get immediate continuation, it's pretty common for them to retrace back even down to about, let's call it like somewhere in the neighborhood of, let's see if I can demonstrate this. I bet I can. This is kind of improv. So going from this swing high here, or swing low here, to this swing high, I would expect this to actually come back up to about here, somewhere in the somewhere between the halfway point between the 0.236 and the 0.382. So let me zoom right in on that. There is a nice rejection on the inverse golden pocket. Obviously, this is a super zoomed in time frame. It's not going to hold any real water, but to traders that are looking for quick entries, that golden pocket is a good decision-making tool. Okay, so in that case, we got a retest of about 50% of the golden pocket, which also ended up being a rejection on that 9 exponential moving average. I would fully expect that we are going to get the continuation that would break this swing low. I would mark it with the green line to show a bearish break of structure, but I also have that change of character line there, that market structure shift designator there, that line there already. So I'm trying to keep the chart as clean as I can within reason. That was the 15-minute 21 exponential. That has definitely moved down by now. Yes, it has. Okay, so I really like having that there. That makes me feel pretty good. I actually think I'm very close I think I want one more move down, and then I will start to mitigate this. But the truth is, during a really choppy market like this, or, well, I mean, yes, it's choppy, but it's also extremely violent. I have a huge stop loss on purpose because I have the ability to simply sell in the event that I want to, So I keep that up there just to guarantee in case there's a monster move like there was yesterday that I don't get absolutely annihilated and blow my entire account because, some, Chinese real estate mega firm filed bankruptcy randomly. And I had no idea until after it all happened, of course. So, that's very interesting. It's important to have the safety net there is what I meant to say. So, so yeah, that's why that's all the way up there. So now what I'm going to do is I'm going to go ahead and prepare a sell order. So normally, guys, I hate using market orders because they take liquidity out of the order book, which almost every exchange on Earth, I'm pretty sure that every exchange on Earth will charge you a higher fee for being a market taker, is what it's called, as opposed to when you use limit orders, you're considered what's known as a market maker. You add liquidity to the order book to help facilitate transactions. So they give you drastically reduced fees. However, when it comes to, I mean, when Bitcoin is moving 1% a minute, 1% every 10 minutes or so, there's no chance that I'm using anything other than market orders for entry and exit because it's not worth it. I mean, if you miss, let's say I had a stop limit order. I mean, with Bitcoin, Bitcoin moved $4,000 in 180 seconds yesterday. It shed 10% of its total market cap in 3 minutes, which is unbelievable. So for that reason, when it's volatile like this, I will absolutely be using market orders, even though I'm paying a hefty amount in fees. Like on this trade alone, just to enter, it was $2.65, which actually isn't that bad. But I mean, if let's say, you lever yourself up to, 10 Bitcoins or whatever. I mean, that's a $20 fee in, $20 fee out, which means your break even is a $40 trade. Good. I mean, you should be able to get it with 10 Bitcoins, but understand that you're adding $40 in losses to every single trade if that happens. So in this case, I'm only doing 1 Bitcoin. So I'm going to be adding about $5 in fees. So my break even is substantially less. So to me, it's worth it. I would rather do that and catch the order that I want, catch the entry and the exit that I want, as opposed to trying to, adjust limit orders and all that. So the only limit order that I consistently use is the trigger market, and that's actually what this is. That is on MEXC. What you do is you would go to. Hang on, let me see. I can actually show you. I am talking about the types of orders that I'm using. So let's say I wanted to enter Bitcoin really quickly. I would go to open here. I would click market. I would say how much I want. So this number down here, these little ticks, there's 100%. I can go 75%, 50, 25, etc., and everything in between, okay? That is the amount of your balance that you want to allocate towards that trade, okay? So let's say I wanted to, enter Bitcoin for 100% of my balance. It would be there. I can see that would give me, if I were to buy, go long, that would be 59.82 Bitcoin. Sorry, stand by. Sorry, this is moving. 1 second, guys. I'll come back to the order, I promise, but this is moving in a big way, and I do not want to miss this one. Okay, fair value gap broken. Market structure shift has occurred. We're retesting a critical order block. I'm up 153% 3 on this trade right now. My entry is up here. And I am going to get my sell order ready because this thing, I believe, is really going to push. I think I'm going to make a lot of money on this trade, actually. I probably shouldn't say that in case, something terrible happens because I'll look like a fool. But, I got a pretty strong feeling that Bitcoin, the dump, is not done. I actually have a target on this, guys, and I know it's kind of whatever the opposite of a moon boy is. I I actually have a downside target for this trade of the swing low that we hit yesterday. I don't see any reason why not. And the reason that I am saying that is because as I look at it, there's nothing below, like, when I get that bearish break of structure here and I take out these order blocks, there's really nothing below to stop me. Not really until like 25.4 to 380. There's these other red lines here. These are other areas on smaller time frames of potential resistance. Basically the long wicks that were happening yesterday. But there's no structure really below where we currently are to prevent us from going back to 24/7. And there is legitimate reasons for Bitcoin to push down to those levels or lower, because there are substantially sized fair value gaps from the rally in March, which would put a target on it at about 20. I want to say it's like 20K. Boy, I tell you what, if Bitcoin drops to 20,000, first of all, I'll make my God, I'll make $6,000 on that trade. Assuming that I would hold this. There's almost no chance that I would hold it the entire time to let it push down to there, because that's not my target. So pretty much, I'm going to be looking to dump. I don't know. This right here, this trade alone, this is 1,400 if it comes down to this target. And that's a lofty goal. But, yesterday, I said in my video, I was hoping that there was going to be a big move like that while I was in a big trade. And then I jokingly turned around and said, yeah, but there's no way that happens. I'm dreaming. That's the dreamer in me or whatever. And then not 2 hours later, Bitcoin made a $4,000 move to the downside. So, at this point, in this condition, in this terrain, anything is possible. So, Bitcoin can absolutely, clearly dump at a moment's notice. So, all right, what are we at on the trade now? 128. That's starting to push back a little bit. My guess is that this is going to come back. Let's see. Going from here to here. Excuse me. I would imagine that Bitcoin will probably retrace at a minimum back to here. But technically speaking, what just happened is a little concerning for me, because that is a higher low. And if it takes out that golden pocket, which is pretty much at that moving average, I'm probably going to go ahead and let this one go. Would really love a significant rejection just like that right there, right now. And the reason I would let it go, guys, isn't because I'm scared. Well, I am a little bit. But technically speaking, this is a higher low than this. And that's what it does when it tries to rally. And I don't really have a lot of space there. I can always re-enter the trade. It's hard, particularly in this environment. But there's also reasons for this to push back up. And here on this little small time frame, I got fair value gap here, and an untested, unmitigated order block there. So, this has a lot of reasons to give a nice push back up. So I suppose when this gets to, let's call it 85, I think that's probably best. No, I'm not going to do that because I want the trade. I want to stay in it. I definitely do because it's a hell of an entry. You know, that I have right now. My entry is protected by this. And I really don't fancy a sweat here. But there are some order blocks protecting me as well that need to be tested. Now, this fair value gap here was mitigated here, but these ones were not. So that has a reason to push back to the upside, at least temporarily. But, I mean, if that ends up holding and sets a lower low than that right there, this is going to be fireworks in a huge way. Honestly, I think we would probably come straight down to here in this range, 25.7, something like that. You know, that's a pretty substantial move for Bitcoin. I mean, that's a lower low. That's a lower low. That's a lower high relative to this swing high. So, I mean, you're starting to see this right here. I mean, this is a longer time frame version of it. So what I want to see now is the rejection here and then continuation to the downside. That's what I want to see. Am I going to get it? Well, I have no idea. But I guarantee you this. We take this out right here. We are almost assuredly coming to test the longer term bearish break of structure, which is actually going to be at this swing low here. So let me slide this over a little bit. Creeping up on me like that. Guess I don't really need this order block here anymore. This one is pretty much smoked. I mean, I'm gonna get rid of it now. I'd be very surprised if that managed to find support if it came down to that level again. I would be so surprised. Oh my God, is it gonna do it? I'm gonna bring this up as high as I can actually, because whoa. Because I want to be able to see as much of a potential move to the downside as possible. I'm up 170 on the trade here, 173. I mean, this would be an amazing trade in and of itself. I mean, it's 26% of my entire account. I mean, it's a hell of a trade. But, I mean, I really feel like this is gonna push. All right, so there's the order block that you saw me delete a second ago. That's officially broken now. It's useless. So now it's testing this order block and this bearish break of structure level right there. I mean, if that happens, guys, and that order block gets smoked, and I think it probably will, there is a legitimate chance. I mean, Bitcoin's sub 26 right now. So there's a legitimate chance that we get a push down, into probably very quickly into like the, 25.7, 25.8 range, which is going to be here about halfway into the golden pocket. I am looking for a bit of a stutter here potentially though at 25.870, which is the top of the golden pocket on the inverse Fibonacci. And when we are not in immediate threat of dump, I will show that to you. And I will also finish the analysis, like a longer term analysis, and actually try to give you guys some targets. Right now, I'm going to tell you right now, my target for today, I'm going to be honest, my target for today is back at the swing low that we set yesterday. So, I mean, you're talking about a pretty big move, and I don't really see too much keeping it safe. Once we break this right here, this 25,600, which is the bottom of the inverse golden pocket, that is the golden pocket that is drawn from the swing low that we set yesterday at about 24,000, whatever it was, 24,006 or whatever it was, and anchored at the top of the bounce after that. So it's going to be up in this range. I'm not going to zoom off this chart right now. Way too much on the table here. Okay, 166. Looking for the retest of the 9 exponential right there. Now, you'll notice that I have a couple of other moving averages on here. They're all exponential moving averages. This is the 9, the 21, the 50, and the 100. I certainly value the 9 and the 21 the most. Those are the most commonly used, and they get interacted with the most. However, during really volatile times, sometimes I do like to have the 50 and the 100 on there as well. Otherwise, during, slow chop, boring price action, I really only like to have the 9 and the 21 on there. And if it's not interacting with those levels, chances are you need to up your time frame that you're looking at it with. So instead of being on it, because these moving averages are exponential, they will move their location on the chart based on the time frame you're looking at. So as of right now, I'm on a 1 minute, and you can see that the 9 exponential is at about 26. So if I switch to the 3 minute, I can see that the 9 is at 26.36. That is going to get a nice push down. I am almost certain of it. Got to take out this new little tiny order block here in order to get to the big dog there. But it looks good. The trade looks good. We're up 195 on it. And I promise you this, I got my finger on the button, ready to dump this entire position. Let me go ahead and slide that up. Put it right there. So if this falls into the golden pocket, we don't really have anything to stop it until about 25,768. And I'm pretty sure I drew that on the 1 minute time frame. So it's nothing. I mean, I put it there just so I could have a heads up that it's going to approach something that it bounced from before. But, I mean, that was on a move up. I mean, this move down could potentially be much, much more violent. I can't believe I'm actually getting a second chance at this trade. That almost never happens. I was telling you guys earlier that I missed that trade for about $4,000, $4,000 or $5,000. Because I sold prior. I mean, I'm actually kind of getting another chance with a easier to understand setup, in my opinion, because there was no indication that Bitcoin was going to make a move like that on the chart. There really wasn't. Like my extreme downside target was 2730 or something like that. So I was taking profits at 27.1 or starting to, want to take profits at 27.1, looking to sell, because I figured everybody else was going to be selling at the closure of the fair value gap that was created for Bitcoin in early June or mid June, when we had the pump from about 25,000 up to 31,700. And it created two very large daily fair value gaps on those moves. So my downside target yesterday at 27,030 or so, that was the absolute bottom of the first major fair value gap that was created. There was a third fair value gap below that, which also got mitigated yesterday. That's nice. So now I'm looking for that break of structure. I got it. There it is. That's a new low. Send it, baby. Now I need this order block to get taken out. We're up 218 or so on the trade, 215. This number kind of updates a little slow. So, sometimes it'll say 220 up here, and then down here it'll say like 210. So whatever. Let's just call it like 215 or so on the trade. But I am looking for this. That's a new low right there. So I am absolutely looking for that move down. Maybe a quick stutter at 25.8. I don't think 25.9 is going to be a problem. But certainly here at 25.870, I expect there will be something. I mean, that is the inverse golden pocket there. And my guess is that if I was looking to long, I would do it somewhere in that range. My guess, though, is that other traders are seeing what I'm seeing. That's so close to getting smoked. So close. It's almost done. And that little level there, that's gone too. Want that rejection. Technically, this order block is still valid. It's valid until this closes. This is drawn from a previous order block that occurred on the rally up. So technically, this has held. And the bottom of this order block is the bottom of a wick for another candle that happened on earlier in on the initial rally. So there is a retest of the 9 exponential Really hoping that that gets rejected. Do not want to see this order block hold. I really don't. And I am prepared to close this. There is a small imbalance to the upside right here between 2634 and 26,000. It's only been partially mitigated by this wick here. It's nothing, but there's a lot more up here and certainly up here. So I will not make that mistake again, and I will close this if it breaks that. If it breaks this and gets a candle close above it. I believe this is a 1 minute chart, is it not? Yes, it is. Okay. Boy, that's nothing but weakness. Nothing but weakness. Okay, so there's 200 on the trade. Wow, this is crazy. Order book is dancing, man. I'm going to be honest, I will probably sell if we fully mitigate the fair value gap and come up and touch that market change. Well, I don't know, man. That change of character actually needs to get retested. If it does come up here, I mean, it's common for those to get retested. I don't know. I suppose I'll close the position if it gets above the moving average, and I'll just try to quickly re-enter, I suppose. But I really don't want to leave, 160. I mean, at that point, it'd be about 160 on the table or so, 150 on the table. Because I'm pretty sure I'm up like 10% on the day. Up more than that now. I'm actually up like almost 40% on the day. If I were to take this trade right now, and that's a beautiful day. I mean, my goal, guys, every day, my goal is to build my account 5%. So, I mean, I've already done that many, many, many times over. So, all of this to say that it is possible to grind a small balance account up to a workable account. Probably, in my opinion, there's no reason to really have an active trading account that has more than maybe $10,000 or $15,000 in it total. And then anything more than that, I mean, do you really need to make, $10,000, $15,000 a day? Do you really need to do that? No, the answer is no. I mean, if you make, let's say you trade 300 days a year, which I absolutely do. If I make, $500 a day? I mean, that's $150K if you're able to, on average, make $500 a day. Obviously, not every day is going to be a winner, as the month of August has clearly demonstrated to me. I can't even begin to tell you how brutal the entire month of July and most of August was. It was absolutely bloody. And I want you guys to learn from that too, from my mistake. My biggest mistake for the last, I'd say, 45 days worth of trading is failing to, number one, have more than one strategy that I could apply to the two different types of common markets. And what I mean by that is 80% of your trading is going to be accomplished during boring sideways chop that just eats your stop losses over and over again. So right now, the strategy that I have, with the help of my friend, I have developed a new strategy that I'm going to be rolling out to you guys, completely free, of course, just for being a part of the Menace Militia. I'm going to give a full tutorial on that that should help you guys deal with really, really boring chop, but still be able to grind out. Because in my opinion, that's what makes a good trader, is somebody who can consistently make money in every market condition. In my opinion, that's kind of the gold standard for me. So this is broken. I'm going to go ahead and move this down. We have a new target for the bearish break of structure, which will simultaneously be the order block getting smoked. That trend is definitely down. I don't like this little curve that I'm starting to see here, though. That I don't like. I really want to see this push back down. What's the 1 minute RSI starting to look like? So we've bottomed on that. Usually what happens is after we touch the bottom of at about the 30 points range on the 1 minute RSI, usually what will happen is we will get some sort of a push up to about 62, 65, sometimes even the top here at 70. But then it will, be overextended to the upside and make its move down. So as of right now, we bottomed on the RSI here, which correlates to a higher low than correlates to a lower low on the chart, but a higher low on the RSI, which means that the bulls are gaining strength there. So that is starting to curve up. I don't like that. It's probably just going to fill the fair value gap there, but I am not leaving that on the table this time. So if that breaks that trend line right there, or breaks that moving average, I'm absolutely dumping this position. And it will be for, as of right now, about 175. I'm okay with that. Or no, excuse me, if it takes out that swing high right there. Basically this 1 minute order block right here. Takes that out, I'm selling. Well, buying technically. So there's the retest. Okay, I'm out. Okay, there we go. That's nice. Counts at 1200. That was 113 on that. When did I have a $207 L? Did that not update yet? Oh, I still have the trigger order open. That's why. Yeah, that $200 L was last night. I told you I gave some back. So yeah, that was this right here. That was actually my only my second trade of the day. So the good news is, because I just made, I think it was about 150 or so. That's a fair value gap there. This is smoked. I need to pay attention actually, because I really want to catch this move down. So I need to try to figure out where this is going to go. Let me tell you what I want to happen. Right now, what I want to happen is I want this to push all the way up here. I'm going to be honest. I want it to push all the way up here and slam down. I want it to come all the way up here and mitigate this order block. Yes, mitigate that order block and have a huge top wick and then slam back down. That's what I really want to happen. Buying between golden pockets right now, probably not the best idea. Time is at noon. Oh, that was a 4-hour candle close. Let's see what that's at. No wonder there's a little volatility. Wow, what a gross 4-hour candle, man. So bad. Look at the wick on the one from yesterday. My goodness. Unbelievable. All right, so that 4-hour candle was a 2.12% drop and closed at 1.84% down, going from, what are you, 26,490 to 25,924. I mean, you want to talk about volatility, guys. I mean, it is rampant today. I mean, good opportunities. I mean, they're going to be presenting themselves nonstop. I mean, the truth is, you could probably get away with taking a long here, but I mean, there's no way I'm betting against this trend right now. Absolutely zero chance. I'm glad that I sold that position, because I would be sweating right now, and I really don't feel like sweating. Besides, I live in Virginia, and it's unbelievably humid. I sweat enough, I promise. Okay, so that is starting to push back up. I imagine after setting that swing low, it kind of has a bit of a history of coming back up to test the 21 exponential. There's a rejection on the 9 exponential on a 15-minute time frame. So what we're doing as of right now, is we are retesting the change of character or the market structure shift right there. So I'm definitely paying attention to that. I'm also paying attention to the fact that this 1 minute order block so far has held, which is being backed up by that 100 exponential moving average. I have a hard time believing that that stands, though. My guess is that this is going to be an energetic move, at least up to the trend line at 26,136. So I'm definitely glad that I sold because my entry was right about here, I think, at about 26,167. I do want to double check how much that ended up being. Okay, so the last two trades were 113. Can you guys see that? All right, yeah. We're 113 and 148. So that's pretty good. Yeah, these are those nasty little trades right there. Good God, it was so volatile, so hard to trade. I mean, almost impossible. And I knew what I was doing. Like I knew that doing that was probably not the best idea. But with Bitcoin making moves like that, that doesn't happen very often. So, the trick here is to instead, when it was really volatile yesterday, what I should have done is just used like 10% of my balance. If I wanted to, I suppose I could increase the leverage, but honestly, the opposite is what should be done. Is you tone down your size of your position, and you tone down your leverage to give yourself the largest possible ability to place your stop loss. And with a market like that, wherever your initial instinct is to put your stop loss, put it at the order block above that. Because you need to be able to give yourself some kind of buffer here. Okay, so that's a break of the 21 exponential on the 3 minute, but who cares? I do care about this. Sometimes it will do a little half rally up to the 21 exponential on the 5 minute, like you see right here, and then it'll get a push down. But it's not very strong, to be honest with you. The 5 minute is a good indication, though. The 5 minute 21 exponential, it's one of my favorite moving averages. I mean, the 21 in general on every time frame is effective. You don't even really need the 9, but I like to have it because it lets me know. It gives me a bit of an early warning that the 21 is going to be tested. So that's why I like to have it there. Some traders leave it at a 10 exponential moving average. I don't know why I like the 9. A lot of traders do that too. Like, they have it set as the 9 and the 21. I don't know why they don't do the 10 and the 20. I guess I don't know, to have some sort of a deviation. Maybe it's a buffer. I don't know, but I use it because other traders use it. And I want to use the most popular moving average because it will help me to understand overall market psychology. When I see something interact with the 21 exponential moving average, I know that there's millions of other traders that are seeing the exact same information, which helps me to make a decision to beat them, I guess you could say. All right, so this little 1 minute order block is smoked. Definitely glad I sold, man. Definitely glad. All right, so where are you going to go to? All right, so forgetting these little tiny moves here, let's start looking at a little bit bigger here. Is that above the golden pocket? Inside the golden pocket. Okay. All right. Well, I actually kind of expect a rejection there. No, I don't. I don't know why I said that. Let me try that again. Because on this move here, we definitely didn't respect the golden pocket. Or did we? On that move, no, we smoked right through it. We actually got above the 786, which make the, on average, during a regular market, not one that is just erupting and exploding one direction or the other like Bitcoin is right now, usually, especially during like the slow, choppy times, you're pretty safe putting your stop loss halfway between the golden pocket and the 786 Fibonacci zone. I would definitely err on the side of caution, though. The wider your stop loss, the less likely it is to be triggered. So, act accordingly. Okay, so there's not really great interaction there. Let me see something. So part of being a trader, part of what I do is trying to anticipate what other traders are seeing, like I told you a moment ago. So when it comes to Fibonacci's, the way that they're supposed to be used is you use these swing highs and you anchor them at the swing high and the swing low. Now, that's what this big golden pocket is. It's just an exploded, larger version from a higher anchor point and a lower anchor point than what you see here on the smaller time frame. So what I'm trying to do is I'm trying to figure out where the interaction is happening. So I'm going to try it here, and I'm going to see if I can find some decent interaction on the zones anywhere near here. Now, mind you, this swing low didn't exist until just now, but it can still be a helpful tool. Okay. Yeah, I'm definitely glad that I sold that. That is, I mean, I know that looks like a double bottom, but I don't consider that a double bottom. I think double bottoms have to have equal lateral termination points, and I'm not seeing that. That's a lower low. That's how I look at that. And technically, the trend has not reversed to the upside yet. Let's see, maybe the 5 minutes a good way to see this. I mean, the bears are still absolutely in control until, let me get rid of this stupid thing. Sorry, guys. All right. The bears are still absolutely in control, and I can demonstrate this pretty easily. Got the swing high here, swing low, lower high, lower low, lower high, lower low, so on and so forth, over and over again. So I would expect that the trend would continue, probably on the trend line. Probably on this trend line here. I don't know if we're going to get the retest all the way up to that trend line. That's one that I was, that's the one for the entire pattern. Actually, if I switch to the hourly, you can see it a little better. That is from the swing market high after the dump. Following the chart movement down. Initially, this was putting in kind of a symmetrical triangle. It wasn't confirmed, though, and we got the breakdown here, which actually alerted me that, there was probably going to be further downside, which I can't believe, considering the amount of downside that we had yesterday. But anyways, I would expect that this gets rejected at some point in here and then moves down. So I'm going to start, once again, sizing up a short position. But I'm not going to do it until I can have some kind of confirmation that this is going to get its continuation down. And usually what I will wait for is any of the fair value gaps that were created on the way up would be a good place to really start considering an entry. What did you mitigate to? So you only mitigated everything in here, leaving all of this unmitigated. There is a small fair value gap here. Move the mic away. It's probably pretty loud. Sorry, guys. On the 3 minute, I mean, that's a common rejection. I mean, it's been rejecting right near that 3 minute. I mean, honestly, it's really the 15 minute that it's jumping off of. And it's the 21 exponential on the 15 minute time frame. So I'm actually hoping that we get the test up to that, because technically the trend is still valid to the downside. It's still considered a lower high as long as it is below that. And actually, yes, yeah, below that swing high right there. So that was a 15-minute candle close. There's a top wick on that. I mean, we've seen that over and over and over again, leading to a push down. So I'm really going to start sizing up a short entry here. Give me my freaking order thing back. Okay, I definitely don't want to just freestyle this one. I want to plan it to the maximum extent possible. So I need to find, first and foremost, on the smallest time frame, the 1 minute chart, I want to see what areas I have to worry about. What areas caused big pushes? This area caused a push. Okay, so that's one. Zoom right in on this, guys. This is very important, by the way, because in my opinion, a core principle of the smart money concepts, which is the strategy that you see me employing for the most part, one of the key fundamental parts of that is understanding order block position. One of the worst things you can do, though, is trade every single order block. Finding order blocks that are valid, that are giving you the best probability for a profitable trade is key here. If you decided it, so I'll give you a really good example here. It would have been very tempting for somebody to grab a short position on this move down, and this order block is certainly valid. It is a lower high. It has kind of a double top here. It's an energetic move down, causing a fair value gap for re-entry in the event that you wanted to take a short. But understand, look what ended up happening. Number one, there was unmitigated order blocks to the downside. Number one. Number two, the area above this had never been tested before. So any fair value gaps to the upside over here are still on the table, which makes this order block, it's valid, but it's also extremely dangerous to take that trade, because look what ended up happening. That order block, if you would have taken entry here, and let's say you put your stop loss above this liquidity right here, which is a common practice, then you would have gotten stopped. And that's really, really important. So it's easy for me to see what's happening here. I can see that it returned to a previous swing high right here. Had a double top essentially, and it's starting to push down. Not really a great fair value gap here being created. I don't think it's energetic enough. I mean, it is there from 26.96. I mean, whatever. That's what, freaking $9 or $10 fair value gap. That's nothing. And none of these order blocks have really been tested. As of right now, this is the first one that has been tested. I can also see that there is still a little bit of this fair value gap here that did not get mitigated. So I will do that in bright green real quick. And I'm not going to leave that there because it's just clogging up the chart. But this candle right here, it only came down to about 50% of that fair value gap before getting that push back up on this candle here. So now what we have just done is we came down and we have set a higher low. Let me look at a slightly larger time frame and see if there is additional fair value gaps. Yes, there is. Okay, the 3-minute is probably a better use of the chart here for this particular scenario. This is the primary order block that I'm going to have to break. But I can see fair value gap here, which is a good thing. That, will attract the price down. However, if those order blocks hold, for example, this order block, because this can come all the way down to here and still be completely valid. I'm not willing to take a short on this until I'm very confident that at a minimum we are going to test this annoying little makeshift trend line. Unless I'm confident that we are going to get a nice bearish break of structure, which I'm not at the moment. Technically, yes, this is a lower high, but this is a key area too, right there. lower high. So I'd be looking for a retest there. And hopefully I get it. I like that little arrow thing. I'm going to be using that in every video from now on. Oh, by the way, if you guys have any special requests of something you maybe want me to take a look at in a future video, leave me a comment and I will do my best to get something together that addresses the issues you guys are actually having. Because I know that we're small right now. It's a brand new channel, it's a brand new group, but I want to start getting more interaction with you guys, and I want to know what ails you. I want to know what problems you guys are experiencing or what questions you have. One of the most, in my opinion, and this is something I experienced when I first started, one of the most frustrating parts of starting to trade is having questions and not having somebody that you can directly communicate with in some way or ask a question, or maybe you don't even know how to phrase your question, so maybe it would just help to just explain the problem you're having, and we can figure out what the question is and the answer to that question together. But yeah, just if you guys are having issues or something you want me to address, or something you're unclear on, or you want to run a strategy by me or something, go ahead and drop me a comment in the comment section under the video, and I will get to it as soon as I can. Okay? I mean, we're small enough that I should be able to address everybody's issues. I hope you guys are making money too. I hope you guys are able. I hope you guys are learning, and I hope you guys are growing your balances. I hope that it's my hope with this channel that I get to contribute to your success, your future success in some small way. And that's it. That's all I get out of this, guys. Like, I'm not going to try to sell you a course or any of that bullshit. Like, I don't, that's not why I'm here. I see that we have a major financial shift coming. A major paradigm shift in the world is clearly on approach. And I want to see as many people be able to endure that financially as possible. I mean, obviously there are other aspects of this that, could get bad, but, I'm not going to get all doomsday on you or anything like that. But, the terrain has changed. Like our parents and our grandparents, they don't understand that you can't just save anymore. I mean, when you have an average inflation rate of 8%, a monetary inflation rate of about 8% since Nixon took us off the gold standard. I mean, you just can't save anymore. The only thing that you can do is buy a scarce, desirable asset that appreciates at a rate that's faster than the rate of monetary inflation and, core CPI. So, that's part of what I'm doing here as well. As, I really want to help people understand that. I mean, the days of keeping your money in cash are over. They are over. I mean, there is a reason that the wealthiest people in the world don't keep all of their wealth in US dollars. I mean, I could show you the graph that demonstrates the purchasing power of the US dollar being diminished since the Federal Reserve was established in the early 1900s. I mean, you would see that the purchasing power of the US dollar is down 97% in the last 120 years. Or, I'm sorry, the last 100 years. And I don't even really need to show you the Sorry. That was a pretty interesting move. Is there anything left to mitigate up here? Just that? Okay. What was that rejection off of just now? Oh, wow. That was going to be a green, or, well, maybe not a green candle, but it was going to be a nice candle for a 5-minute. That's a nice rejection on that. I like that. That's a good sign. That's a strong rejection on the 15-minute. Lower high, or I'm sorry, high, a low, lower high, lower low, lower high. Bearish break of structure. Por favor. There is that fair value gap here. I'm on the lookout for this order block. The reason that I'm interrupting myself is because I think that there is a nice trade opportunity starting to form, but I'm not willing to take it just yet. There was a fair value gap there. That was actually a nice trade opportunity right there, an entry right there on that fair value gap. What I'm hoping happens now is a quick push down, creating a fair value gap that I can then, that simultaneously takes out this order block, preferably this order block as well. Honestly, the whole order, all these order blocks, I would love it if they just got smoked on a quick candle and then I could buy on the bounce. Then I would feel a lot better. What is that right there? That's that annoying little trend line right there. So, I mean, that's an ideal scenario. I don't think that's going to happen, and I really don't think I'm getting an entry up here. I think it's much more likely that I'm going to get an entry somewhere in this range. I don't know if I don't think I want to take an entry up here at all, just because of this order block right here. Let me switch to another time frame and see if I'm missing one, because the last thing I want to do is take entry on something that has a different order block that I'm not paying attention to on a higher time frame or something like that. It actually looks pretty good. 3 minute, there is no fair value gaps on the 3 minute like there was on the way up. So that means that it mitigated itself on the way down. That's a very efficient move for Bitcoin. That's very good. I mean, that's definitely going to break down right there and test this order block. I'm looking for entry. I'm either going to take the trade here if it pushes right through the order block, or I'm going to try to take the trade up here. But either way, I'm going to prepare that now. So I want this to be 1 Bitcoin, no more. And actually that's, wow, that's awesome. So that's 50, that's only 56% of my usable balance on this trade, which means that I'm going to have a significant amount ready to go. This is going to be market. Okay, so there's the test of the order block. There's the break of the order block. Oh man. Probably going to get a test on this order block right here. I'm not just going to rush into this one. There is a fair value gap there, and probably I'm going to get a retest of the 9 exponential before I get a continuation down. So I'm going to put this right here in the implied fair value gap zone, and I am going to wait for my opportunity here. 3, 2, 1. I think that's going to be a sniper entry. Famous last words. I always think they're going to be sniper entries. All right, let's not waste any time, and let's get this freaking stop loss in place. It's going to have to be a pretty substantial one. This is a critical area. So that's 242. Is that above the previous swing? I'm going to give it a little bit more than that, but I can adjust later. Let's just get it in there first. So that's 26,256. Man, that last trade was nice. It really pushed down far. All right, so we're going to close that short. So what I'm doing is, all right, I think I have time to show you guys real quick, actually, because I know that a couple of you have been asking me about using the orders. Okay, so what I'm doing, guys, I initially opened here with a market order, and I selected, it was something like that, right? But now I want to close it. So it's a short, so I'm going to go close, and I'm going to select trigger. And when you select trigger, there's a drop down. You can either do a trigger, a trailing stop, or a post only. Just do trigger to keep it simple, okay? So you click on trigger, you input the price that you want that to activate at, okay? And this is, in this case, I wanted it to activate at $26,256. I'm going to, if I leave this blank, I'm going to have to put a limit, the actual execution price, the actual sale price in the trade. So if it was going to be a limit order, then I would do something like 26,270 to give it a little bit of room to move, but it's too volatile. I'm not doing that. So I'm simply going to click market, and you can see it populates automatically when it says place order at best price. And since this is going to be an order that I'm using to close my entire position, well, it doesn't have to be. I can do this a few different ways. If I wanted to, I could do 50% of my position. Let's say I wanted to do it here at 26,141, and I could place that order. Then I can come and put another trigger order for the entire thing. But in this case, I'm actually going to go ahead and put this at 100% because I want to dump the entire position. If it hits there, that's a 26 to 56, and I will click close short, and that automatically populates on my screen, and that's it. So let me go ahead and switch back to the chart for you guys, and you can see that now I have this, now I have this here, the trigger order, and it's right at the level that I wanted it. You can see that there, okay? The cool thing about Menace, and one of my favorite aspects and a useful, something very, very useful that I haven't been able to find on other exchanges. I know they exist, and I know Forex exchanges have this a lot, but I haven't been able to find it on crypto exchanges really until Menace. I can actually grab this, I can hover over it with my mouse, and I can grab my stop loss, and I can adjust it. I can drag and drop it wherever I want. And in this case, I don't know if I'm willing to take that big of an L, actually. That's pretty big. So what I will do is, for now, I will keep my stop loss there, which means because I have one full Bitcoin in this trade, one full Bitcoin here, you guys can't, can you see that? You can't actually. So it's 1.03 Bitcoins, Bitcoin, not Bitcoins, weirdo. That's what I have in the trade. So that means for every dollar that Bitcoin moves, I will make or lose a dollar. So I can see that on this order planning tool, my short tool, I have the red area, which is what I want to put my stop at. Okay, so in that case, this number here, it says 229.9. That means I will lose approximately $230 in the event that this pushes up, because again, I have one Bitcoin in the trade. Okay, so I just wanted you guys to see that. In the strategy that I'm going to bring to you guys soon, I need to make sure that it's fully functional before I do so, but I think it's a pretty good one that's going to help a lot. It's pretty similar to what I was doing before, but it does have some very key differences, and I'm going to roll that out to you guys as soon as I'm confident that it works. But it seems like it's what I've been using to trade the small balance to build it, and it's actually it is kind of it is very different than what I was doing before. I still use smart money concepts in order to execute it, but the biggest difference is going to be the trade size and your risk tolerance, and we'll get into that when I'm ready to finally roll this out. Again, free of charge, of course. What I really want to do is I really want to bring this down here to the trend line that just failed, but that's a higher low on that, which sucks because that order block right there definitely cracked. So now I have to start worrying about reattacks. Now on the 15 minute, that is a lower low than the previous low. So my guess is this is probably going to push somewhere in this range, and hopefully will turn right back around and dump. But here comes the volatility. It's coming. I mean, we've cracked. I mean, we've cracked 26K at this point. I mean, we're at 26,000 right now. That's what this candle is. So I'm really looking for that to move down. We're about to close a 5-minute candle. Yeah, we're about to close a 5-minute candle. I really want to make sure or see that close below the 9 exponential, which it did. It is not a bullish engulfing candle because the close is equal with the previous bearish candle's close. However, the wick is kind of overshadowing it a little bit. What time is it? 12:30. I'm trading for about 2.5 hours now. I'm not going to be on much longer. I have a couple things that I got to knock out. I'm actually going to enroll in school a little bit. Going to be taking an entrepreneurial class, excuse me, and actually pursue a degree in that, believe it or not. Made that decision recently. Wish me luck. Also, it won't interfere with my trading too much. Okay, so as of right now, we're down about 22 on the trade. I still really like my entry. I mean, it was a fundamentally sound entry, in my opinion, and right in line with my strategy. So, what I did is I waited for a trend reversal, which I got, a short-term trend reversal. I waited for multiple confirmations of that, and I waited for an energetic move to the downside with this candle in order to take entry. So I'm actually very pleased with that. I like this top right here. That's nice. That shows a lot of selling pressure up there, and that is an equal high right there. So basically what that tells me, and remember guys, when you're looking at charts, they're telling you a story. Now let me tell you what this story is. The story is that the bears pushed the price down and the bulls failed to push the price higher. So I think of it as like a scoreboard. When I'm judging the strength or weakness of a trend and trying to determine who's in control. This is actually a really important part of trading, is understanding who is in control at that moment on multiple time frames. So what I can see here is that, number one, on the larger time frame, obviously the bears are in control. On the daily and the 4-hour time frames, the bears are certainly in control. On the 1-hour time frame, the bears are also in control. And I can also see that on the smaller minute level time frames, so the 15, the 5, the 3, and the 1, I can see that the bears are in control there as well. Now, zoomed all the way in on the 1 minute, I can see that the bears or the bulls have failed to create a higher high on the 1 minute here, but also, and more importantly, they have failed to create a higher high than this so far. So the bears are winning this game in a big, big way right now. So I got a pretty clear order block. I actually like it when these types of order blocks appear because they're very clean and there's nothing really interacting with them prior. So they allow, if they break, they tend to be pretty aggressive. So really, really hoping that this little swing low right here on a 1 minute candle gets smoked, because it's a good indication that we are going to finish the move finally. What I don't want to see, I don't want to see this come down at, here, hang on one second. Make sure you can see that. So I have my swing low here and then a push up, okay? I came back down to that trend line, or established that trend line when on that touch. Came back up, set a lower high. What I don't want to see happen right now is I don't want to see, number one, I don't want to see this go like here and then take off. But more importantly, I don't want to see this come down and get supported on this order block again. I want it to finish its move, because the trend so far is that when it comes up and fails to set a higher high, that when it comes down, it sets a lower low and touches this trend line. So at a minimum, I need to see this order block get taken out, the bearish break of structure occur, and this trend line at least get tested. Now, if it gets tested, the most important thing isn't necessarily the trend line. It's that we take out this swing low here, created in this trough right here. Okay, that's the most important aspect of this. And any derivative of that I'm okay with, as long as that is taking out that swing low. Ideally, and what I think is the most likely, is if we don't get supported here and move up and we continue to move down, ideally, I would like to see both of these order blocks break. I would like to see the bearish break of structure and an interaction on this trend line that will probably be quickly accompanied by some sort of a retest, maybe to where this order block currently is. And then hopefully that will be it and it will push down. So that's what I'm looking for. That's kind of the ideal scenario. Well, that's my ideal scenario, but it's also what I think is most likely to happen. Okay, but again, we need to take out this little order block here because this is a nice fair value gap here that's getting been fully mitigated at this point, and we are attempting to set a higher low right now. I'm up like $13 on the trade. It's still in its weird little choppy phase. This is the most dangerous part of trading. This is like this right here. Immediately after you enter your trade, this is when you are most likely to lose money, either by panic selling or by simply just getting a reversal in the opposite direction. And then you end up having to, you have to make a choice. You will either start scaling your position down to mitigate your loss, or you will expand your stop loss, which I don't recommend, or you close the trade and eat the loss. I mean, so that's where I am right now with this trade. So there are things that I'm looking for that are going to help me make that decision. So right now, as of right now, this is what I'm seeing. On the very zoomed in 1 minute time frame, I can see that we pushed down here, set this little swing high, pushed down, and then came back and challenged it and got rejected. However, so that was an L for the bulls because they failed to create a new high. It was a W for the bears because they prevented a new high. However, the bulls came right back and have now confirmed that they are setting a higher low. So now we really need the bears to step in here and make sure that this does not take out these swing highs here, because that's a good indication that we are going to get a major challenge up to these trend lines here. And oh, okay, my stop loss is actually way up here. And I know how violent Bitcoin can be. So I'm going to put this here at 26,250 because it's inside, it's a little deeper inside of the golden pocket to the upside. But more importantly is it will allow all of these unmitigated fair value gaps to get closed without stopping me, And as near as I can tell, there are no other significant ones above me that are in the immediate vicinity. I'm sure that there are some way back, but obviously I cannot put a stop loss at, 26,000, or I'm sorry, like 27,000. That's ridiculous. I mean, at that point, there's no point in even having a stop loss. What is my liquidation on this actually? 26,548. So if I were to not have a stop loss at all and just YOLO the whole damn thing, it'd be 26,548. My forced liquidation would be there. So yeah, that seemed right. Side note, guys, under no circumstances are you to intentionally let any exchange force liquidate you. If you want to roll the dice and you want to, let's say you're willing to, lose absolutely everything that you put into the trade, do not just let the liquidation engine take over your trade. Instead, what you should do is you grab your stop. So my liquidation would be up here at 26,548, right? Let's say I wanted to give this maximum chance for success, okay? And expose myself to maximum 100% risk of my entire, everything that I put in here. And that's about 50% of my balance right there. So 674 is what I'm risking, right? Let's say I just said, screw it. It's so volatile. I'm tired of being stopped or whatever. You get emotional, whatever the hell it is, right? Do not just let it liquidate, because it will liquidate early. That happens. And not only does that happen, if I'll give you an example. If you were to set your stop loss, let's say you can see my liquidation is 26,548, right? So let's say I'd take my stop loss and I put it at 26,5. Sorry. Let's say I put it at 26,574 or 47, right? So my stop loss is somewhere in that range, right? So let's just say I put it like $1 away. That stop loss still needs to trigger. It's not going to be automatic. It needs to find an order that matches it. So if you put that too tight to your liquidation, you can still be liquidated. Like, it'll pretty much void your stop loss, okay? So be aware of that. So if you're going to do that, I don't advise you do that, but if you do that, then the right way to do it is to, first of all, use a market order. Do not use a limit order. It'll blow through it. Give yourself a little buffer. So in this case, let's just say my liquidation is 26,550. Then I would put my stop loss at like 26,535. Okay, just to allow time for the order to process, because otherwise they will take it a little bit early. And let's say your stop loss would have actually left you like $50 or $60 from whatever it was. Let's say you put your entire balance in it. Okay. And you said, all right, I'm willing to start over from $50, and you put your stop loss there, and it's too tight, it will take your $50 as well. Okay. And that's happened to me, and it's awful. So it was actually much, much more than that. It was about 250 when it did it to me, and it sucked. Okay. But just be aware of that. Okay. You should have a stop loss on every single trade, no matter what, even if it's a giant stop loss. But you need to have something there always, because getting liquidated, I got liquidated twice yesterday, but that wasn't because I tried to not have a stop loss. I got liquidated because the price was so volatile that in the time that it took me to enter the trade and switch my screen over to a limit, trigger limit or trigger market close, it hit my liquidation before I could even get a stop loss in. So, and that sucked. That actually happened twice. It was awful. All right, so we're down 46 on this trade right now. I'm not panicking yet. So, this is what I decided I was willing to risk. So let me just double check how much that would be. So as of right now, so it's 26,251. So that would be a loss of 257. That is more than I actually wanted to. I don't want to do quite that much. What's the difference here, though? I'm really not willing to bring the stop loss below this, because this is the order block that I'm looking to save me in the event that this one fails. And there is a fair value gap up here. Okay, so we are starting to challenge that initial market structure shift, that change of character. Because remember, we had this move up. And then we started to push down, and, we came back and retested. And so now what we're trying to do is hopefully hold support on this. And that would be a confirmed lower low. It would just be confirming that the trend is going to continue to the downside if it gets rejected here and takes out this order block. But we'll see. Yeah, I'm sorry, guys. I got about 10 minutes left before I have to start making my way to somewhere. So I will hold the trade until, let's call it, 1 o'clock. Well, I'm going to keep the trade no matter what, but I'm going to end the video in about 10 minutes. Hopefully I get, some sort of a move, and I'm able to close the trade before the video ends. But actually, I'm happy with where my stop loss is right now. Let me, real quick, let me just zoom out on the chart, because this is what I wanted to do initially with you guys. It's going to be a lot of crap in the way. I'm sorry, because I got all kinds of stuff on there. But I just kind of want to go over what happened yesterday. Like, it was unreal. So that move, this move happened in about 4 minutes. So my initial downside target for the day was right about here, right at about 27,000, right around there. And the bottom just fell all the way out of the market. Wow, that is really chopping around. But there's a couple of really interesting things to the downside here, particularly a couple of large fair value gaps that are still outstanding from previous runs. So I'll actually switch to a 3-day chart so that we can see a little bit more of this. So, the reason for the dump yesterday is twofold. Primarily, I would say that it's uh, because of the Evergrande filing for bankruptcy. I think that that is the bulk of the move there. A lot of Fortune 500 companies, a lot of big tech companies, and a lot of government, a lot of international governments and countries have a lot of that. Oh gosh, hold a lot of their not cash reserves. Oh my god, I don't know why it's escaping me right now. I'm so sorry. They're holding their debt. I think they're holding their debt because I mean, it's the largest real estate firm in all of China, and I think that they account for like 2% or 2.3% of China's entire annual GDP. So it's massive. So them filing for bankruptcy is going to affect a lot of other companies, and I will look into a more detailed understanding of what that is, because I promise you that that's going to have long lasting ramifications. But I haven't taken the time to really think, excuse me, think through that entire scenario as that could mean for us in a global macroeconomic kind of way. But I don't think it's a stretch to imagine that that is going to affect quite a few companies. I mean, the S&P, the Dow, and the Nasdaq, they were selling off this morning. They were gapping down in a big way because of it. Bitcoin gapped down in a huge way. It's a huge deal. But I owe you guys a better explanation than all that. But in any case, I think that the bulk of that move is caused by the Evergrande. But however, there's also the annual support that we were sizing up that also failed. So, oh wow, is that pushing back down? What time is it? Oh yeah, and you got about 8 minutes left, 7 minutes left until the hour closes, until 1 o'clock. So yeah, the last 10 minutes of every hourly candle are always nice and volatile. Anyways, we closed the fair value gaps that were created here on the move off that trend line in early June, late June, right? However, and we also retested this order block, and as of right now, it is held. But I want to draw your attention to something really kind of scary, a little bit. Scary for people who are hodling, okay? In, I believe it was March. Yeah, March, when we had this test of the trend line, we created a very similar situation with two large fair value gaps here on the daily. And actually, I believe we went on to create a third one here. Now, the third one ended up getting mitigated on this push down here. Okay, and it went ahead and closed the fair value gap that was formed here on this giant candle. Okay. Wow, my trigger order is actually right there. Wow, that's wild. That's funny, actually. However, these have not. So let's just talk about this. I'm not saying this is going to happen. I have no idea if this is going to happen, but I want everyone to understand that this is possible, okay? And if yesterday has proven anything to us, it's that Bitcoin can get legs and run up unexpectedly, and it can also have the rug, not the rug, that's a bad analogy. It can have its legs taken out from underneath it and just fall to the ground, which is exactly what happened yesterday. this move is possible. Okay. And given the terrain that we have now economically, I think that this is possible in a very short amount of time, and maybe even as soon as I don't want to say close of business today because it's 1 p.m. Eastern at the time I'm making this video on Friday, but it is possible, you know, in the next week or so that we do start making our way down here. And I just want to prepare everybody for that. Especially if you're one of the investors that is a long-term hodler. Okay, be prepared for some volatility here. So I'm going to give you some targets so that you can anticipate this and make the best possible decision. That fair value gap, the two that have not been mitigated at all, begins at 23,966 and terminates at 22,163. Okay, that is a range of about $1,800. Okay, that's fair value gap number one. Then there is an order block that is here, created by kind of the changing of the guard of the day right there. Okay, and then we have this second fair value gap to the downside, which is, I promise you this, if that fair value gap gets triggered, it's going to scare the ever living shit out of everybody. And me, I'm going to celebrate because I will hopefully make some money on the short down, and then I will probably irresponsibly, to an irresponsible degree, over leverage that and try to ride that back up and allocate as much as possible. Anyways, that second fair value gap begins at 21,800. Let's call it 21,800. And terminates at 20,676. And doesn't that just seem like the kind of move that an angry, volatile Bitcoin market would make? A retest of that unbelievably famous $20,000 level. I mean, we haven't been there. I mean, if that happens, guys, I mean, be prepared to test 20K if that happens, if we start to fill this fair value gap. I don't even want to say it. I don't even want to say it. I probably shouldn't say it. But I'm going to say it anyways, because ignorance doesn't help anybody. But it is bliss sometimes. Unfortunately, guys, there is more fair value gaps that are substantially and are actually bigger to the downside beyond that, beyond the order block here at 19.5. And these are stemming from the very beginning of the year, coming off the cycle bottom. Now, the fair value gaps up to this point have been mitigated, which means, unfortunately, I'm going to catch so much hate for this one, I guarantee it. This fair value gap has not been fully mitigated. It's only been mitigated about 50%. That's one. There's another one here. I mean, essentially, this is all one. I'm going to count it as one just because it's a very quick wick in there, and that's just because the day changed over. So basically, it's this whole, you know what, the hell with it. It's this whole damn range, guys. Like, there's no easy way to say that, okay? It's this whole range. So this whole range is like a 3-day fair value gap, basically, that we've only came down and tested to about 19,500 on. So that's only, let's call it 33%. Not to scare everybody, but that bottom would be at about 17,004. And it's pretty much guaranteed that if we were to come that low, that we are going to almost assuredly be sizing up the bear cycle bottom, the market cycle bottom. Let me be very clear. I do not think that is going to happen. I don't think Bitcoin comes anywhere near these ranges. I don't. I think maybe it's possible to come down to 19.5. I do not think that it is possible I mean, God, I shouldn't even say it. I think it's very improbable that Bitcoin comes down and closes these fair value gaps. Let me just say that. I think the worst that we could expect, in my opinion, is for this order block here to get tested. And that bottom is at 19,513. Okay. I don't think that Bitcoin comes this low. I do think, however, it is possible to fill these at about 20K. Yeah, especially given the move that we just had. I don't know, man. I guess it's possible to come down here to like 20K, 19K. I guess that's possible. Given the move that we had yesterday, I mean, one more move like that puts us within striking distance. God, I'm going to be honest, it would actually be pretty freaking bullish to come down and close those and get a big powerful wick back up to the upside like we did like we had yesterday, just on a larger scale. Like, I'm telling you right now, like, if it's gonna happen, I promise you, you want it to happen right now. You don't want it to happen in 6 months when Bitcoin is on approach to 50K or 60K. You don't want that. There's blood in the street right now. Everybody who cares about the long-term health of Bitcoin, you want to see this happen. You want all the over leveraged longs to get rocked. Let's call it a 5 billion, because yesterday the liquidation was 1 billion. Okay, $1 billion in liquidations. It's one of the worst in years. I'm not sure exactly what the worst one is, but I know that it's certainly up there. I don't ever remember Bitcoin crashing $4,000 in 3 minutes before, but so it was substantial. But you know, a move 2 or 3 times that, or a move that on par with that, another $1 billion in liquidation. Because I mean, look at this push that we had up. I mean, that's a move from 24.6 just to close the day at 26.6. So that's a $2,000 move. I mean, there's leverage inside of here, and I'm actually hoping that I get to ride the short down to destroy them. I'm not gonna lie. So yeah, just be aware that this can happen, okay? And don't get caught off guard. I want you guys to have the most information available as soon as I'm able to, bring it to you, so that you have the best possible opportunity to negotiate these markets, because they are extremely volatile. Bitcoin's the most volatile asset in the history of mankind. It's also the fastest and most appreciated asset in the history of mankind. So, and it did it Bitcoin's being adopted 2.5 times faster than the freaking internet in 1994. So, I mean, it speaks for itself, But in any case, this is the daily. The daily is buried. I'm going to be honest, guys. I don't think I've ever seen the daily that buried. And yesterday, just for fun, I want to show you this. Yesterday, at its absolute worst, I think the 1 minute RSI, I'm not going to scroll all the way back there, it's too far. But the 1 minute RSI was literally at 2. And I don't believe I've ever seen it be that low, ever. It was unbelievable. God, crazy move. I just want this to be on your radar, guys. That's all. I'm not trying to scare you. I'm not trying to put FUD in the market. And I am extraordinarily long-term bullish on Bitcoin. I mean, my targets are insane. Like, people think I'm a moon boy, but I mean, I think they're doable. I really do. And I'll do a video showing you guys my logarithmic chart that I have mapped out that gives me my bullish sentiment long-term for Bitcoin. Which I know that a lot of you are actually pretty new to crypto, so that might be something you haven't seen before. All right, so while I've been running my mouth talking about the chart, I'm actually up $155 on this trade, and actually I was up a lot more than that. I was up about 300 on this trade. So this is heating up. Time is 1:05. I am not closing this, and I am not stopping the video either. I will be late to what I have to do. I legitimately do not care. Okay, order block smoked. Order block smoked. Bearish break of structure smoked. Retest. That weird little trend line that formed initially, that's smoked. Resistance smoked. We have entered the inverse Fibonacci golden pocket. Let me tell you this right now, ladies and gentlemen. If this pocket fails at 25,000, 600. I don't even want to say it. I don't even want to say it. I'm going to say it anyways. 25K is my target initially, but ultimately this would be my immediate short-term target, like by the end of, like, by close of business. I mean, I tell you this right now, guys. I mean, this is showing nothing but weakness. Like, taking a long in Bitcoin right now, in my opinion, is absolute suicide. It is. Like, I know that it's overextended to the downside. I get it. But the market is petrified right now. People are, like, the buyers that are buying right now are probably long-term hodlers. But the traders, they want to short it. The trend is down. They're going to do what they can to keep that trend moving, because powerful trends that last a long time make a lot of money. So, be very careful if you guys are trying to accumulate. If I were you, and again, guys, this is not financial advice, but if it were me, I would wait until I had real confirmation that the bottom of this dump is over. And this is not over. I'm going to say that right now. Time is 1:05 Eastern Standard on Friday, August 18th, okay? This dump is not over. I really don't think so. Now, we may come down and set a higher low, and if that happens, then, that's a good indication of reversal, that the downtrend is starting to reverse, but we have not gotten that yet. I'm up 200 on this trade right now. That's nice. I want to try to get the account to... I mean, honestly, it would be amazing to get the account to 2K today. That would be amazing, considering 2 days ago I started with like 460 or 430 or something like that. I mean, that'd be nice. Oh, excuse me. We're up 230 on the trade. We're up 230, and I'm only this far away. That's another bearish break of structure. This is starting to fail. We're up 334 on the trade. That's the 786 about to get smoked. Oh my goodness. Let me get this ready. How did I not have that ready? So up about 280 on the trade, 270 at the bottom here. That's the bottom of the inverse golden pocket. Guys, if that breaks, I mean, look at how close we are to 24/7. This is the bottom from yesterday. 24/7.29. That's the bottom. I mean, that was my target by close of business today. But I'm telling you, this market is petrified. So that's 300 right there. This is a super important moment. I have this dreamer feeling that we're about to get a really, really powerful move to like 24.9 or at least 25K. I don't think these order blocks here hold. What are they anyways? I mean, oh my God, I don't even want to move off of this, but I gotta see what they are. I marked them. So, okay, so this order block here is a combination. It's this wick right here. And if that fails, guys, there's nothing to stop this from coming down to challenge this small little order block on a very, very tiny time frame. Like, I mean, we are almost there. There's a retest right there of the 9 exponential on the 1 minute chart. I mean, this market is terrified, ladies and gentlemen. I have a feeling that we are about to see a really violent move. Oh boy. Get ready for volatility. Get ready. I'm telling you right now, if we break that golden pocket right there, I mean, maybe that's like, I think the inverse 786 is going to be like here at like 25.65 or something like that, or 25.265. Like, you can hear the excitement in my voice because I'm pretty confident that this is going to dump. Get ready. Get ready. God, I wish I was live right now. Oh my God, I wish that this was live. Whew, it's going to be a monster. This is going to be a monster trade, dude. Relative to the size of my account, of course. I mean, my unrealized puts my account right now at 1560 right now. So that would be 325 as it stands right now if I sold, which of course I'm not going to. I mean, I'm pretty sure that I'm going to get this move here. I think I'm about to make like $1,200. I really am. I'm pretty sure that that's going to happen. I think this is going to be 4 times worse than this. Dude, what if we break 24? If we break, I promise you this. If we take out 24, like 24.6, 24.5, right around there, and get any level of rejection at the current swing market low of 24.7, I'm sorry, but I would be sizing up that the top of that fair value gap, or about 30% of the way into the fair value gap that I just showed you from the month of March. And I want to say that I wish I would have marked it here. Oh, wait, I did, didn't I? I did. I'm not going to lie, guys. If this breaks and we don't get supported, I'm sizing up 23.5. I'm sizing up, honestly, yeah, about 23K is about 50% of that first fair value gap. And I mean, the market's going to be terrified at that point. So, I mean, everything's on the table at that point. But if I promise you, if 24/7 fails, bro, you're talking about a monster dump. I mean, that's a huge move in its own right. I mean, that's a $1,200 move just from my entry. I mean, that's a huge move. I can feel it, man. Like, it's not going to take much. That golden pocket, I mean, this right here, if that fails, I think we blast right through these that order block right there. I think it's going to be fast like the other one. I'm not even playing around here. I got my finger on the button the second that I see that, like, start getting stupid, like jumping up and down like it was yesterday, getting hyper volatile. I'm out. I'm gonna do my best. I think I'll feel pretty good if I can make like $600 or $700 on this trade. This is a freaking pretty big day for me already. I don't think I've even had an L yet. I don't think I've lost any money at all today. It's the first time in like 40 days that I have not had a loser. But it's still early. I got a lot that I have to do though. I gotta do school registration. Yuck. 303, 300. I am on the 1 minute. Yeah, I'm on the 1 minute chart. I don't need to look. I really mean this. All it's gonna take is one quick push down to here. Just one rejection. And I have a really hard time believing that that's gonna hold. What's the RSI at? The 1 minute. Why are you so zoomed out? Did I do that? I must have. The RSI was buried here. That's probably going to get a reversal, actually, initially. Because in the video that I posted yesterday, there was a very similar setup where I had divergence on the relative strength index on the 1 minute chart. I can see I have a low here and a lower low. But here, at the same time frame on the RSI, I have a low and a higher low. It's all going to come down to like the next 2 minutes worth of candles, because I'm telling you right now that if this sets a lower low, it's done. Like, it's smoked. It will get annihilated. And I will make so much money relative to the size of my account. But it'll certainly be a good day. I would love to get this account to 2K by the end of the day. That would be unbelievable. So that's 266. I'm so zoomed in. The move, I mean, it can be so quick. I don't like not being able to see my stop loss, though. It's just kind of like a personal pet peeve of mine. I am ready at any second to close this short, to close this position, because I am not incinerating $250 right now. That's exact. That was a mentality that missed me a $4,000 trade yesterday, by the way. But that move has not happened yet. And I'm going to be honest, this is if it's going to find support, this is where it is the most likely to do it. I mean, to be honest, it was most likely to do it at its previous swing low that it had like 2 or 3 hours ago, but it failed. So now the next most likely place for it to find support is directly where it is right now at 25,600. 25,600, because that is the bottom of the inverse golden pocket. That is not a strong move off that golden pocket, though. The thing is, when you have a move as strong as you had yesterday, the people that are willing to go long initially, like in a very short time frame, they kind of get wiped out. So they're not, that capital's not really there anymore to take the opposite position. I mean, that's probably why this has been a relatively easy move down since topping yesterday. After that huge push down, I'm sitting here chatting, and that balance is bouncing all over the place. Don't worry. Anything that I make right now, I'll give back later, I'm sure. Always do. One of the worst feelings in the world, by the way, is to have an absolute amazing day and then turn around and give it all back. 230. It's such a crappy place to try to take a new trade too, though. I'm weighing that as well. I'm trying to, on the fly, weigh opportunity cost here. You know, if I sell and it dumps, I'm 2 days in a row, I'm going to miss a huge move. Conversely, I don't know that that dump is going to happen. I know that I have $200 in profit on this trade right now, which I am, if that closes that 1 minute candle over that 21 exponential, I will absolutely dump this position and re-enter. Flip red. Don't make me sell it. Don't make me do it. Push down. There's a good girl. Come on. No, don't talk back. Break your 9 exponential and push down. Don't start with me. Don't start with me. Don't start with me. I don't want to hear it. Okay? I don't want to hear it. Push down. Don't do it. Don't do it. Look, I'm talking to my son. I miss having coworkers, people to talk to. My neighbors probably think I'm weird because all they hear is me talking to myself all day when I'm talking to you guys. I hit myself in the face with a pen just now. Dork. Okay. Really want to see that fail. One more retest of the 21 exponential up here. Maybe. Hopefully not. Hopefully it doesn't even touch it, because I already touched it and got rejected. Now I just wanted to get rejected on that candle body, or like halfway between it, and then push down. There's the RSI. Boy, this is a tough one. So the RSI is at the same place it was at here when it pushed down. But it definitely has room to run all the way up to here and then push down, which makes sense for the area that it's at. Unfortunately, that move up, even though I'm pretty confident that in my call that this is going to dump today, that would eliminate all of the gains that I just had on that move. Hopefully, Bitcoin just answers my prayer and just handles this for me. That is not a touch of the 21. It was close, but it did not get there. There's no point in me having anything else visible on the screen above it, because I'm not interested in what's above it. I want to see as much of this screen's real estate as possible to the downside because I feel like this move is going to be violent like that. A move. I mean, I want to move like yesterday, man. I'm going to be honest. Like, I want that move down to here, and I want to try to get it as close as possible. Like, I want to try to, like, honestly, I want to make about $1,000 on this trade if I can. I mean, that would be unbelievable. That's it. Okay. Got to take this order block out, and then these, and then finally the bottom of the golden pocket. And after that, it is a wrap. This is not gold here, by the way. It's orange, but it's just, it's not, I didn't want it to be too in your face. I have that there just for me to know that that's the last real order block before the abyss. All right, so we're at 290 on the trade. The bottom of the golden pocket, I believe, is about 330, 340, something like that. This is a nice trade. I am waiting with my finger on that close short market order. It's ready to go. Definitely don't want to see a higher low here. Definitely not. In all the excitement, I forgot to mark the order blocks that it needs to contend with. So what did it contend with? This one. Okay, so that's going to be actually that right there, I'm sure. Oh, no, don't you dare start lagging on me now. Are you kidding? What a time to start getting lag. Unbelievable. Horrible timing. Oh, no, not before a major dump. Are you kidding? Don't do it. Oh, my God. Oh, boy. Okay, as of right now, we had to put... Oh, wait, I'm not even done. All right, honestly, this is really the only order block here. It's too small of a pattern. That's the only order block that it needs to break. That's it. So basically, I need it to break the bottom of the inverse golden pocket. So we're up 313. You're not connected to any available network. Dude, don't start. Don't start with me. Are we back on an available network? Do not start with me. Let me close everything that is not absolutely necessary at this moment. Hold on. Let's see, do I have anything else open? I have nothing else running other than one tab on Chrome and OBS. That's it. Don't do it. Don't start with me, Bitcoin. Do not start. You're going to give it up today. That's what's going to happen. There's a delay in updating data. Okay, I'm going to refresh the screen now. Hopefully it will solve the problem before I feel the need to instantly sell. Watch it be at like negative 15. Okay, is that better? All right, good. No, I don't send me a bunch of crap right now. I'm not interested. Don't start with me, Bitcoin. Knock it off. You know where you're going. You know what's about to happen. Yeah, I see the little temporary swing low or higher low. I see it. We all know what's about to happen here. I'll sell if it pushes past that order block to the upside. Hopefully I don't have that problem. Hopefully it's just going to do what I think it's going to do. And I mean, God, given the importance of the area that it's in, I just have a hard time. I don't know. I've spent a lot of time on the Bitcoin chart over the last few years, thousands and thousands of hours. And I have a feeling, like sometimes I'll just get a feeling, based on what I'm seeing, it's not, I'm trying to keep emotion out of it, but based on what I've seen and what I'm looking at and the way that Bitcoin is behaving, I just have this really, really strong feeling. Oh, wow. Hang on. That Bitcoin is going to make a big move to the downside. Like I have a hard time believing that it doesn't after a move like that. I have a hard time believing that it doesn't go back to find if it actually had a bottom. I want that to fail to set a higher high. Because right now it just set a higher low right here. It must fail to break that. So if it breaks this order block, if this order block gets breached, I am selling. And unfortunately, that's going to be about, let's see, where's it at right now? So I'm at 268 right there. So that, I don't know. I'm not going to bother doing the math. Yeah, what are you, like another $60 on top of that? So it'd be 200, which is fine. That's fine. But if it takes out that swing high right there, that little swing high, it's probably going to get a pretty strong push up, at least to test the top of this. And I'm not vaporizing that much. I'm just not going to do that. And I will, hopefully, that doesn't mean that I'm going to end up missing that move down that I am very confident is going to happen. I'm going to feel like an absolute fool if it does. Please set a lower high right now. Do not breach that order block. If you do, I'm going to sell the trade, and I got to get going, but there it is. Damn it. Ugh. Trash. All right. Guys, that's it for now. I'm sure that it's going to dump. I hope that I'm able to be in a trade. I hope I'm recording when it happens. I want to wish all of you the absolute best of luck. This market is going to be extremely dangerous today. Please make sure you're exercising good trade mechanics, risk management. You have a trade plan and you stick to your trade plan. Get ready for some serious volatility. I mean, legitimately, this is going to be an incredibly volatile day. And I think we're just warming up. Thank you again for coming back to the channel for another episode. This one was fantastic. I mean, I'm way up on the day. I'm at 1,400 right now, which is amazing. So I think I'm up like a roughly 400 or so on the day, which is great considering I started the day with $1,000. So 40% growth on that. My goal is 5 every day. So that challenge is going pretty well, but it's easy when Bitcoin's moving. Okay. All right, guys, that's going to be it. If you haven't done so already, I would appreciate it if you would like and subscribe. Until next time, profits over wages. 1, 2, take care.